Imagine waking up one morning not to clock in, but to your bank account working for you. Your assets call the shots. That shift from earning to owning, that's the real revolution. Today, we unlock the 5 assets to buy and never sell, the pillars of going from zero to CEO, from paycheck to legacy. The secret most people overlook isn't in the hype, the shortcuts, or the latest trend. It's in the discipline to hold. Wealth isn't built overnight, it's compounded. The power of holding is the difference between the average person who hustles forever and the one who breaks free into lifelong freedom. Too many chase quick wins, but every empire, every fortune, every legacy was created through time, patience, and the unwavering ability to stay in the game when others fold. Think about the most valuable things in your life. They didn't become valuable instantly. Your reputation, your skills, your network. They all grew because you stuck with them. That same principle applies to assets. Whether it's stocks, real estate, or businesses you own, their true strength is revealed not in the first year or even the 5th, but over decades. The longer you hold, the more the silent force of compounding works behind the scenes, multiplying your wealth in ways that feel invisible day to day, but unstoppable over the long run. Here's the trap most people fall into. They confuse activity with progress. They're constantly buying, selling, flipping, chasing. That looks exciting in the moment, but it keeps them trapped in the short game. The real players know the game isn't about movement, it's about momentum. When you buy the right assets and have the conviction to hold, time becomes your business partner, and time never takes a day off. Consider this: if you invest in a strong asset that grows just 10% a year, in the first few years the growth looks modest. But fast forward 10, 20, 30 years, suddenly that same asset has multiplied itself several times over. Not because you were smarter than everyone else, not because you traded daily, but because you understood one rule: compounding is quiet at first and explosive later. The discipline to hold is rare because it requires something most people don't have: patience. It's easy to panic when markets dip, when headlines scream about crashes, when everyone else is selling in fear. But that's when the separation happens. The ones who hold steady, who trust the fundamentals of what they own, are the ones who get rewarded. Every downturn is temporary, but every great asset held long enough becomes permanent wealth. Think of real estate. The value of a property in a good location doesn't just climb, it multiplies. Rents increase, demand rises, and inflation works in your favor. 20 years later, that property doesn't just represent a home, it represents freedom. The same goes for owning equity in strong businesses. They reinvest profits, expand operations, and reward shareholders, all while you simply hold. This is compounding at work. Growth creating more growth, money creating more money. But let's take this beyond numbers. Holding builds something bigger. It builds character. It teaches you discipline. It forces you to focus on the long-term vision rather than instant gratification. That mindset shift is the bridge from zero to freedom. When you commit to holding, you're saying, I believe in what I own, I believe in the future, and I believe in myself enough to wait. The irony is, the hardest part about holding is not financial, it's emotional. Watching others chase quick gains, feeling the itch to sell when fear sets in, doubting your decisions when results take time. This is where most people break. But those who stay calm, those who trust compounding, always come out ahead. You win by outlasting, not out-trading. Now here's the truth no one tells you. One great asset held long enough can change your entire life. You don't need dozens of risky bets. You need conviction in the right ones. Whether it's a business you've built, a piece of land you've secured, or a stock in a company you believe in, the magic isn't in owning it, it's in keeping it. Holding is the quiet strategy. It doesn't look glamorous. It doesn't give you bragging rights in the short term, but over time it becomes undeniable. That's when people look at you and say, you're lucky. But it was never luck. It was patience, discipline, and trust in the power of compounding. So remember this: the wealthiest people you admire didn't just buy smart, they held strong. they didn't panic in storms, and they didn't sell their future for today's comfort. They understood the most powerful force in building lifelong wealth is compounding, and the only way to unlock it is to hold. If you want freedom, if you want a life where your money works harder than you do, then embrace this truth. Buy right, hold tight, and let time do the heavy lifting. That's not just strategy. That's the difference between hustling forever and living free. Wealth is never built on one leg. A single source of income, a single type of asset, a single path, it all makes you fragile. The moment that leg gets kicked out, you collapse. True strength, true freedom, comes from building a foundation that is diversified, not scattered, not random, but intelligently structured. When you create multiple pillars of income, security, and growth, you protect yourself from storms and put yourself in a position to rise no matter what happens around you. Think of it like a fortress. A fortress doesn't rely on one wall to stay secure. It has layers, gates, watchtowers, and reinforcements. Each one is there to protect the others. Your wealth should be no different. If your entire financial life depends on just your job, or one investment, or one stream of income, you're not free. You're vulnerable. Freedom means if one stream slows down, another one picks up. If one market crashes, another market is still working in your favor. That's what diversified foundations give you. The mistake many people make is they think diversification means simply owning a bunch of things. It doesn't. True diversification means balancing your assets across different categories that serve different purposes. Some assets are there to generate consistent cash flow. Others are there to grow in value over time. Some are there to protect you against inflation or downturns. Together, they form a foundation that holds strong no matter which way the economy moves. Let's break this down in practical terms. Imagine you've built skills and a business. That's one pillar, your ability to generate active income and build ownership. Now take a portion of that income and put it into assets that grow, stocks, equity in other businesses, or real estate in strong locations. That's your growth engine. Then you add cash-flowing assets, rental properties, dividend, paying stocks, royalties, things that pay you month after month, whether you work or not. And don't forget your safe assets, your reserves, your emergency fund, your protection against risk. Each piece works together. You're not relying on one wall to keep you standing. You're building an entire fortress. Here's the beauty of diversification done right. It creates resilience. When one sector struggles, another thrives. When the stock market dips, maybe your real estate is stable. When real estate cools, maybe your business is still paying. The point is, you're never cornered. You're never forced into panic because you know you have more than one way to win. But diversification also requires clarity. It's not about spreading yourself too thin. You don't need to own everything. You need to own the right mix of things. Too many people chase every opportunity they see, jumping into 10 different ventures without mastering one. That's not diversification, that's distraction. The goal is to build intentional layers of wealth that complement each other, not compete with each other. There's another layer to this. Diversification isn't just financial, it's mental and strategic. You want to diversify not only what you own, but also how you think and how you operate. If your only strategy is work harder, then when you hit a limit, you'll be stuck. But if you've built multiple strategies, working smarter, leveraging people, leveraging capital, you've diversified your approach to growth itself. That's what takes you from struggling to scaling. Let me make this clear. A diversified foundation is not about playing it safe. It's about playing it smart. It's about making sure that when the economy shifts, you're not knocked down. You're positioned to take advantage of the shift. That's why wealthy people get wealthier during downturns. While everyone else is panicking, they're calm. They know their foundations are solid. They're not desperate to sell. They're not reliant on one paycheck. They're ready to buy opportunities at a discount because they built their fortress years ago. That's the long game. You're not trying to win in a single play. You're designing a system where you win over and over again in any environment. You're building wealth that doesn't just survive, it compounds and grows stronger because it has balance. Ask yourself this: if one stream of your income stopped tomorrow, how safe would you feel? If one investment crashed, would you still be confident? If the answer is no, then you don't yet have diversified foundations. And that's your work. Build the fortress before you need it. Create the multiple pillars before the storm arrives, because when the storm comes, and it always comes, you don't want to be scrambling. You want to be steady, watching from the high walls of a fortress you built with intention. Diversification is the difference between being vulnerable and being unshakable. It's the difference between wealth that's temporary and wealth that lasts. And if you want freedom, if you want power over your own life, then build it on a foundation that doesn't break when the world shakes. That's how you protect your present, and that's how you secure your future. Most people get trapped because they don't understand the difference between owning an asset and carrying a liability. They think just because they own something, it makes them wealthy. But ownership isn't always an advantage if what you own is draining you instead of paying you. A true asset is something that puts money in your pocket, increases in value, or creates leverage you can use. A liability, on the other hand, takes money out of your pocket, demands constant attention, and limits your freedom. The people who never break out of the cycle confuse the two. The people who build lasting wealth make it their mission to only hold assets that pay, not liabilities disguised as assets. Think about this. Someone buys a big car, a flashy house, or the latest gadgets. On paper, they own those things. But what happens next? The car depreciates every day. The house drains them with taxes, maintenance, and debt payments. And the gadgets lose value the second they're unboxed. That's not ownership, that's liability. It may feel good in the moment, but it eats away at long-term freedom. Compare that to someone who buys an income property, a business, or equity in a strong company. Those assets don't just sit there. They grow, they cash flow, and they make you money even when you're asleep. That's the difference between looking rich and being free. The problem is, society has trained people to chase liabilities as a status symbol. You're celebrated when you buy an expensive car, but nobody claps when you quietly acquire an undervalued rental property. You're admired when you show off luxury, but real power is in silent ownership. The wealthy understand this. They don't care about appearances. They care about control. They know freedom comes from what you own that produces, not what you own that consumes. Here's the truth. Not everything you buy is an asset, even if you paid cash for it. An asset is defined by its function, not its form. If it gives you leverage, income, or long-term appreciation, it's an asset. If it drains your bank account and locks you into expenses, it's a liability. Once you understand that, your decisions about money completely change. You stop asking, "Can I afford this?" And you start asking, "Will this pay me back?" Let's take an example. A house you live in might feel like an asset because you own it, but in reality, it can often behave like a liability. It requires mortgage payments, upkeep, taxes, and it doesn't directly put cash in your pocket. That same money invested into a property that generates rental income flips the equation. Now you own something that pays for itself and pays you. That's wealth building. That's ownership done right. This mindset shift is critical because liabilities trap you in the cycle of working to pay for them, while assets liberate you from work. Every liability you carry is a chain. Every asset you acquire is a key. Stack enough keys and suddenly, you're free to live life on your terms. The biggest trap is emotional attachment. People convince themselves that the things draining them are assets because they want to feel secure. But security doesn't come from labels, it comes from results. The results don't lie. Either what you own is producing or it's consuming. Be ruthless with that distinction. Cut the liabilities that pretend to be assets and double down on ownership that pays. The wealthy never ask, "What can I buy to impress people?" They ask, "What can I own that will outlast me?" That's the mindset that builds generational wealth. Assets don't just serve you, They serve your children, your grandchildren, and everyone who comes after. Liabilities, on the other hand, disappear the moment you can no longer keep up. They have no lasting value because they depend on your effort to sustain them. And here's where it gets powerful. Once you align your focus toward true assets, you create a snowball effect. The cash flow from one asset funds the purchase of another. The growth from one investment creates capital for the next. Before long, you're no longer trading your time for money. You're trading your assets for more assets. That cycle is how freedom is built. So, when you think about ownership, strip away the illusions. Don't be fooled by titles, payments, or appearances. Ask yourself one question: does this thing give me freedom or take it away? If it gives you freedom, it's an asset worth holding. If it takes it away, it's a liability no matter what anyone calls it. The path to lifelong wealth isn't complicated. It's about stacking assets and shedding liabilities. Own what grows, own what pays, own what lasts. Refuse to let your money be tied up in things that impress but depress your future. That's how you stop living paycheck to paycheck. That's how you rise above the cycle. And that's how you build real freedom. Ownership that works for you, not against you. The market is never a straight line. It rises, it falls, it crashes, it recovers. Those who treat every fluctuation like the end of the world will always live in fear. Those who build resilience will always thrive. Resilience against market fluctuations is not about predicting the future. It's about preparing yourself so no matter what happens, you stand tall. Wealth is not created by timing the market. It's created by time in the market and the strength to hold through every storm. When panic sets in, you can always see the difference between those who are fragile and those who are resilient. The fragile sell too soon, cut their opportunities short, and end up locked in a cycle of fear. The resilient keep their eyes on the horizon. They know downturns are temporary, and every crash contains seeds of opportunity. They stay steady when others lose their heads, and that calm allows them to come out not only unharmed, but often stronger. Resilience starts with mindset. If your wealth strategy is based on short-term emotions, you will always be controlled by the market. But if your strategy is grounded in principles, owning assets with intrinsic value, holding for the long term, and staying diversified, then fluctuations stop being threats. They become noise. You don't panic at noise. You tune it out and keep moving. Think about this. Every major crash in history eventually recovered. The Great Depression, the dot-com bust, the housing crisis, the pandemic shock. Every single one eventually gave way to new growth. The market rewards patience, not panic. Resilience is built on remembering that fact when it feels hardest to believe. When everyone else is running for the exits, resilience means you stay planted, or even better, you step forward to buy when prices are cheap. That's how generational wealth is created, not by fleeing during fear, but by standing firm and seizing opportunities others are too scared to touch. But resilience isn't only emotional, it's structural. If all your money is tied up in one place, one stock, one property, one business, then any downturn in that area can wreck you. Real resilience means spreading your foundation. Diversification, cash reserves, multiple streams of income. These are not luxuries, they are shields. They protect you so that when one side of your financial world shakes, the whole structure doesn't collapse. Liquidity is another layer of resilience. Too many people get trapped because all their money is locked in things they can't access. Then when markets dip, they're forced to sell at the worst possible time. The resilient keep enough liquidity to weather storms without touching their long-term assets. That gives them the power to hold, and holding is what unleashes compounding. Another truth, resilience means controlling your emotions better than the market controls you. Greed in the highs and fear in the lows are the two forces that wipe people out. When prices soar, greed makes people over-leverage, chasing gains as if the ride will never end. When prices crash, fear makes them sell, locking in losses that could have been avoided. The resilient resist both temptations. They don't chase at the top, and they don't fold at the bottom. They ride the wave, knowing the ocean always comes back to balance. Resilience also comes from clarity about what you own. If you truly understand the value of your assets, you won't be shaken when their price fluctuates. You don't panic about the daily sticker price of a strong business, a valuable property, or an asset that generates income regardless of market noise. The people who panic are the ones who never understood what they owned. They thought they were holding assets, but they were really just gambling on trends. Real ownership gives you confidence to wait out the storms. Every downturn is a test. It asks, do you really believe in your plan, or are you just here for the good times? Most fail that test. The ones who pass end up owning the future. That's why you must see fluctuations not as threats, but as opportunities to prove your resilience. Every storm clears out the weak hands and rewards the strong ones. So, how do you build resilience? You prepare before the storm hits. You build a diversified foundation. You hold cash reserves. You own assets with intrinsic value. You train your mindset to stay calm when fear takes over. And most importantly, you commit to the long game. Because resilience is not about surviving one crash, it's about surviving all of them, while continuing to grow year after year. In the end, resilience against market fluctuations is freedom. It means you no longer live on the edge of fear, reacting to every headline and every drop. You live with confidence, knowing that no matter what happens tomorrow, you are built to last. Markets will rise and fall, fortunes will be made and lost, but resilience ensures your fortune stays intact. And when you can hold that line, you're not just playing the game, you're winning it. Financial freedom is not just about money, it's about mindset. The way you think about wealth determines whether you spend your life chasing it or building it. Most people believe freedom comes when they finally earn more, when they finally hit a certain number in their bank account. But that's not freedom. That's dependency on a finish line that keeps moving. Real financial freedom begins the moment you change the way you think. It begins the moment you stop living as a consumer and start living as an owner. The average person is programmed from day one to trade time for money. Go to school, get a job, climb the ladder, retire decades later. That's the system, and if you never question it, you'll spend your whole life inside it. The financial freedom mindset says, I refuse to depend solely on one paycheck. I refuse to sell all my time and energy for someone else's vision. Instead, I will build systems, assets, and income streams that allow me to own my time. That shift, from employee thinking to ownership thinking, is where freedom starts. The mindset is simple, but not easy. It requires patience, discipline, and vision. Patience to build assets over time without needing instant results. Discipline to avoid spending on liabilities that impress but don't progress you. Vision to see the future you're building, even when it feels far away. Without these, you'll always be pulled back into the cycle of working harder, spending more, and wondering why freedom feels out of reach. Think of freedom like oxygen. You don't notice it when you have enough, but when it's missing, it becomes the only thing you think about. Financial freedom works the same way. When you don't have it, money controls every decision you make, where you live, how you spend your time, who you answer to. But when you do have it, money becomes a tool, not a master. You choose work because you want to, not because you have to. You choose your lifestyle because it serves you, not because debt dictates it. The financial freedom mindset also rejects the trap of comparison. Too many people destroy their future by trying to keep up with others. They measure their progress by someone else's car, house, or vacation. But comparison is a liability. Freedom isn't about looking rich, it's about being untouchable. It's not about showing the world what you own. It's about knowing you could walk away from anything and still be secure. When you stop chasing status and start chasing sustainability, you cross the line into real freedom. Another part of the mindset is control. You must control your money before it controls you. That means having a plan for every dollar, being intentional with every investment, and refusing to let emotions dictate financial choices. When you control your money, you're in the driver's seat. When you don't, you're a passenger in someone else's vehicle, and you'll never like where that road leads. The freedom mindset also sees challenges differently. Most people fear recessions, downturns, and setbacks. The free-minded see them as opportunities. When assets are discounted, when panic takes over, when everyone else is retreating, that's when the seeds of generational wealth are planted. Freedom requires you to think counter to the crowd, to act not on emotion, but on principle. That level of thinking only comes when your vision is bigger than your fear. But the deepest layer of the financial freedom mindset is purpose. Money by itself doesn't create fulfillment. Freedom is not about never working again. It's about choosing what kind of work, what kind of impact, and what kind of life you want. The mindset isn't about escaping responsibility. It's about creating capacity. It's about having the space to do what matters without money being the barrier. That's why people who reach freedom often find themselves more driven, not less. They now operate from choice, not necessity. So here's the truth: financial freedom is not something you stumble into. It's not a lucky break, a one-time deal, or a quick hack. It's a mindset you adopt, a philosophy you live, and a discipline you repeat daily. You decide to think differently about ownership, about assets, about control. You decide to stop trading your life for short-term comfort and start building for long-term independence. And once that mindset takes root, every choice you make starts pulling you closer to freedom. At the end of the day, financial freedom is not about money. It's about life on your terms. It's the ability to wake up and decide how you'll spend your day, not because of what the bank says, but because you've built systems that take care of you. That kind of freedom is rare because the mindset that creates it is rare. But if you adopt it, if you train yourself to think like an owner, invest like a builder, and act with discipline, freedom is not just possible, it's inevitable. So here's your CEO blueprint. Invest first in yourself, then in assets that pay, protect, and appreciate. Don't just chase wealth, build it to last generations. The rule: buy smart, and then never. Because when the right assets work for you, you never have to work again. From zero to CEO, that's lifelong wealth. Now, go own it.